All right, we're back and going on Sunday morning. Hope everybody had a good Saturday night. And what we want to do is we've had a couple of questions here, and we'll go ahead and re-answer them, and then also open the floor to any questions that people have for yesterday, for Saturday, for all the material that we covered then. Right now, let's see, Malcolm's just kind of asking if if there's any value in normalizing the pre-market volume in terms of like using some of the like in John Bollinger's idea about the normalized volume, and that's something that you could do with this. It's just something that I have not done, so I don't really have any information for you on that. I do know that the main thing I'm looking at is that part of my routine is to throw out the stocks that have news or upgrades, and just look at the stocks that don't have any news affecting them, just to see what the volume is like on those stocks. So I want to compare kind of apples to apples, and that if KLAC didn't have any news yesterday and doesn't have any news today, what's the volume on that stock? If it has an upgrade today or if it has earnings today, I'm going to throw that out and I'm going to look at another set of stocks. But that's just kind of how I use them to gauge pre-market volume, if that helps.
No.
Yeah, no. On the hourly rolling pivots, it's just because they're much closer together.
I actually just use the levels.
Okay. Yeah, it's just using the exact levels.
You can though; it'll work.
Justin, who do you use as your market profile data provider? We get some of that. Some of it's off TradeStation, and some of it's off. What does Ali use?
CQG. eSignal has market profile, but it's not as accurate as like CQG. We actually use one of our members. One of our members in the room is Ali, and he's kind of like an assistant because we rely on him a lot for market profile. He's one of the very few that have a lot of experience in market profile, and is a really good trader, and that I trust his actual input on what. But it's not. They provide it the wrong way. They do provide it free, but they provide the clinical way to look at market profile is 30-minute time periods. Okay, and for you guys that's not familiar with market profile, pretty much what it's doing is it's taking a chart and it's laying it up on its side. It's called a time price objective, okay? So it's like the price action is plotted sideways in numbers A through Z, okay? When you first look at market profile, it's like reading hieroglyphics. But it's a very good way to look at the internal like bid-ask level depth of what's going on. So it'll tell you to be like, okay, 15 or 150,000 contracts were traded at 10,049, and so that'll be like the breaking point, okay? And then it'll give you the 70% value area for today, and that's like the high of the range and the low of the range. And then there's other techniques that you have to do, and you have to take the low and the high and add 2 and divide it by 1.5 and stuff. The guy that we rely on the most is Ali. He uses CQG charting. That's pretty much who we rely on right now, and he's in the process of actually getting us up to speed more on market profile. But it's kind of like he relies on our stuff and we rely on his stuff. That's kind of the relationship that we use and we have ongoing with him. There are a couple books on it that I'll put a list together for you for market profile that you guys can start doing some homework on and stuff. It's a weird way to look at the market, but it works pretty good.
You mean when to switch contracts, Bradley? Like when to go from the June contract to the September contract? It's actually pretty easy. Just think of it this way. Calculating the pivots. Okay, I got you. Basically, what you want to do, it's actually it's a confusing week to be doing pivots. But the idea is that yeah, we'll look at it, Sarah. I'll have to look at it and see. Bradley, the idea is that you want to use pivots using the data. I'm trying to think of an easy way to explain this. You want to use pivots using the data that's still current. What I mean by that means that if you're using a daily, for daily pivots, let's say it's the week before expiration, and you switch to trading the daily pivot to the new contract. So now on the daily pivots, you want to use the new contract high-low close. But for the weekly pivots and for the monthly pivots, those would still be valid until you get a full week's worth of data for the new pivots or a full month's worth of data for the new pivots. I don't know if that makes sense or not. But basically, like once you start trading the new pivots, the new contract in September. Okay, let's say it's September 20th, and you switch from trading the June contract to the September contract. This only happens 4 times a year when they switch contracts. So let's say on September 20th, you decide. Yeah, so I mean it's kind of a pain, but it doesn't happen that frequently. So if on September 20th you decide to change from the old contract to the new contract, on that day you'd start using the high-low close of the new contract. But for the rest of that week, you'd still use the old contract, and for the rest of that month, you'd still use the old contract. So when September then rolls into October, for October you'd use the September high-low close of the new contract, and so on. So it's kind of, yeah, we'll have to spend some, the next time we put this together, we'll explain it a little more clearly, but if you have any questions on that, I mean, obviously you can email us too during those quarterly changes. Oh, so what Sarah's asking...
Large are 15 points.
Okay.
On the SPOOs. So I mean, it's kind of harder.
Larger.
No, here. It's mine.
Oh, okay, so yeah.
The large gaps are 15 points or above.
Yeah, Sarah, the large gaps are like I mean, these are like the rare once in a while gaps, like over 15 points in the S&Ps, which is like 150 points in the Dow. Those are the big gaps.
But the percent stop loss can also apply to the smaller gaps too. You can use it. Yeah, you can use a percent stop loss on the concept of a gap fill trade. Just I would say keep it consistent and keep it within your risk parameters and don't mess up with it. Like if you're going in live trading, if you're going to do a percent stop, I would kind of do less contracts. If you're going to use the 25% stop, it's kind of like when John does his 1.5, he's not risking, a full position on that trade all the time. Okay? And then whatever you do, when you do something, try to keep it as consistent as you can. Don't like follow John, follow me, and also use a 25. Pick one until you get really good at it, and then add another skill. Okay. Question is, there's contradictory discussions of the squeeze in the manual and the videos. John says the squeeze is on when the Keltners are inside the Bollingers. That's correct. Hubert says the opposite. No, we just use a little bit different terminology, and we're going to go over that today, so it'll be clarified when we go over it. It's just, I say, we're going into a squeeze when the Bollingers are inside the Keltners, and John says the squeeze is on. It's just. It's no big deal.
I actually have a typo.
Oh, you have a typo? Really?
Yeah.
Okay.
It's Bollinger's inside the Keltners.
Okay, all right. Oh, I got you. Keltner's inside. Oh, Bollinger. Yeah, okay. So, yeah, what slide's that on?
It's probably on my part. Yeah, Malcolm, that's a typo on my slide. It's when the Bollinger Bands go inside the Keltners.
Bradley. So then this option's expiration weirdness only happens 4 times a year. Yeah. On gaps, are entries immediate or wait for a 2-minute high-low? I play them. The way I play gaps is I play the pure gap data, and then what I do is I will use the ticks and the trend to enter because I'm more of a scalper. Okay, so if I get let's say I get a 30-point gap on a Thursday, and the ticks start out at like 800 and immediately go to 1,000, I'm shorting it. I'm just at 1,000 ticks. I'm giving it a shot. I'm shorting it, and I'm using a 10-point stop. Okay. Now let's say we have a 40-point gap. It's a gap up, and there's decent volume on the stocks that we look at. And then I'm not sure whether it's going to feel. It looks good on the percent on the raw data. It looks good. If I feel uneasy about it, I'll give it a couple seconds, and I will stare at a 1 and a 2-minute chart of the trend, the tick, and then time and sales, because I'm fairly accurate or fairly decent at reading. The old style, they call it tape reading. So that was how I was trained how to trade. So wonder if his mute button's on. Oh, his microphone's turned on.
Okay, can you hear now, Justin? Minor details. All right. You guys have any other questions from any of the stuff, any of the material that was covered yesterday? And remember, too, on Monday we'll be going over all this stuff, all this data live, so you can kind of see how it all ties together. All right, so what we're going to do now, we're just going to kind of jump in, continue with the rest of the manual, and we're going to start off today with a couple of very short sections, but they're very, very important to what we do. So again, it's kind of like the internal indicators. It's not necessarily a very long section, but it's some of the key stuff in helping to determine the specific trades that we take or don't take throughout the trading day. So I'm going to start off with the scalper buys and sells and what they are. And I'm basically just going to tell you how they're made and then how we use them. Okay, so what the scalper buys and sells are, a lot of people ask on the charts that we post during the day in the trading room, what are these white pivots that are painted on the charts and then the blue dots and the red dots? And well, those are the scalper buys and the scalper sells, and we'll have a snapshot of those here in a second. And basically what it is just it's a visual way for us in TradeStation to help determine whether to buy or sell against a pivot level. And what I like to use these for is generally, like if I get into a trade first using a pivot, then the scalper buys and sells can quickly confirm whether or not the trade's going to work out. And that's why I like to use them. And what happens is that when you get 3 higher closes in a row, it'll paint what we call a pivot bar, or 3 higher, it could be 3 higher closes or 3 lower closes, and it basically signifies a change in trend and a potential turning point in the market. What I like on this is you can use these on any time frame. You could use them on a daily chart, and you'd have to get 3 higher closes in a row to get the bar, which so I like to use it on a 233 tick chart, and that way the turns happen fairly quickly. And on what happens then is when we get a red dot above the bar, that's a sell confirmation, and when we get a blue dot below the bar, it's a buy confirmation. And what those are is we'll have just a regular default stochastics, MACD, and RSI. And when those cross over from their like for a confirmed sell, when they cross over from being overbought and they cross over, like when the stochastic goes from, 85 back down through 80, and that would be one of the situations where we'd get the red dot marking on there. So you could actually have a chart and sit there with all 3 indicators on it, and then sit there and stare at it and try to say, okay, that's 3 higher closes, boom. What I like to do with this is I don't have to stare at it, because I'll have a visual representation of when it happens, and then also I hook up an audio alert to it. So whenever I do get a scalper buy or a scalper sell, TradeStation will make an audio alert, and I'll know that we have a potential shift in the market. So that's just kind of the background of how they work. Now on this next page, 136, it shows a chart with the scalper buys and sells in place. And as you can see here, they have to be, Malcolm, exactly. It has to be 3 consecutive higher closes. So if you get 2 higher closes and the next one's not a higher close, it won't paint. So yeah, you need 3 consecutive higher closes. That's a good fix. So on here, what you can see, they have to be consecutively higher than the previous. Right. So yeah, just to clarify, we call these pivot paint bars, but they do have nothing to do with the pivots that we talked about yesterday. When we say it's a pivot high or a pivot low, we're referring to the scalpers, because basically what happens is when you get a change in price like that, you just call it a pivot. So it can be a little confusing, but just remember, if we're calling it a pivot high or pivot low, we're talking about this indicator. And then if we're talking about a move to R1 or R2 or to the daily pivot, then we're talking about the pivot levels. Okay, so if you look on this chart here, you can see some examples here at the top here. Okay, so we're rallying. We get 3 lower closes. So it paints a pivot paint bar. And let's see, you got a question. Can we increase the size of the PowerPoint on our screens? I don't know if they can they?
Not that I know of.
Yeah, I think it'll stay. It'll stay the same way. It'll stay the same way right there for that. So you can see right here we've got 3 lower closes, 3 lower consecutive closes. So then we got the paint bar here to mark that level, and then we got the red dot confirmation. Okay, you can see those red dots, and those are the sell levels. And then basically you just kind of stay in the trade until you get another pivot bar. And in this case, you get the next pivot bar right here. That would be the signal to get out of the trade. And you can see that these kind of line up with the pivots as well. But basically it just kind of keeps you in the trade for as long as, as that's working. Now when we use this in conjunction with pivots, we basically would wait and get our next entry here at the next pivot level. And then you can see we get the white pivot paint bar, and then the red dot sell confirmation, which basically is confirming that the pivot trade is correct. And you can see that it basically keeps you in the trade all the way down to the midpoint, where you get the white pivot paint bar saying that you got 3 higher closes, and then the market starts to rally. Okay, so it's just a visual way to kind of keep on the right side of the market in those situations. Now let me remove these. See, Malcolm is asking, to show a pivot, there also needs to be a lower or higher closes before the paint bar. The bar that's painted is actually the first bar. So you've got bar number 1 has a close, and then bar number 2 has a lower close, and bar number 3 has a lower close. So it's going to go back and paint it on that first one. So you just need 3 in a row, and then that first one gets painted, so the 2 in front, then there's just leaving those 2 in front of it. Larry, you don't see the chart? If you don't see the chart, you can go to page 136 in your manual. That's the chart we're looking at. And if you log out and log back in, that should set you up there. Yeah, so what it'll be is that the red dots are actually fairly fast. The pivots, it'll be slightly lagging because you're going to have, which is why you want to use this on a very fast time frame, which the 233 tick chart is very fast. So generally, the ideal trade on something like this is that you're basically getting in, say, shorting at the pivot. Then soon thereafter, you get the confirmation that the trade is correct, and then it just shows you just confirmation, basically all the way down. Now, one way I was talking about is yesterday. If you remember on yesterday, we were talking about using a 20-point stop on the trades. You can see here that when you get down to the midpoint, you get this confirmed buy. but then as it comes up, it rolls over and gets a confirmed sell. Well, instead of waiting for your 20-point stop in this instance, you can sit there and just take that as an exit point and then just get out and wait for the next setup. So that's kind of a way to, again, it kind of increases your risk-reward, because instead of sitting there waiting for a 20-point stop, these signals are telling you that the market's rolling over and that you can just actually just use that opportunity just to get out of the trade, actually make a little money out of it, whereas it would actually have rolled over and got stopped out had you stayed in it. So it's a pretty valuable tool just on gauging, kind of like the supply and demand situation of the market like that. Yeah, Jim, I only really plot this on the S&Ps. You can plot this on the Dow. What I found that on the 233-tick chart on the S&Ps, it works very quickly. You can also use it on a 144-tick chart of the Dow, and it works pretty good too. As you'll see on Monday when we're doing this, what I like to do is I'll have one chart on the S&Ps with the scalper buys and sells on it, and then I'll have the YM chart with the squeeze indicator, which we're going to talk about. So that way I don't have to have both charts loaded up with stuff, because if you've got a sell in the S&Ps, you can take that in the Dow, and vice versa. If you've got a buy in the Dow, you can take it in the S&Ps. Okay, does that make any sense? Do you guys have any questions on this? It'll be, you'll see this live in action on Monday, so it's kind of a short slide on how it works here, but you're going to see this live and unfolding live before your eyes on Monday, and so we want to just kind of give you an idea of how it works. I think that's everything on this one.
On your slide, somebody was asking where would your entry be when you were to explain it. Where's your entry?
I got you. Okay. If you guys are using, there's two ways to use this. The first way to use this is in conjunction with pivots. So what I like to do, like right here, you see this is a sell signal right here. I personally wouldn't take it because it's not against a pivot level. I like to see these against pivot levels. So right here, that's against a pivot level. Up here you can't see it, but this one was against a pivot level.
Now, when you're saying you're going to take it at a pivot level, are you taking it as soon as it turns white, or white with a confirmation red dot?
In my experience, I've found is that if the market's really falling hard, I will wait. Like, say the market has just fallen like 5 S&P points, and then we get a scalper buy. I will wait for the blue dot confirmation to go long. But if the market's just drifting and I see that white bar pivot against that white bar against a pivot, I'll actually get in a little bit early, because if it changes, I can always just get back out.
Okay.
Bradley's asking, what was it about a MACD and stochastic confirmation? Basically, it's like on the stochastic, like on this chart it shows an RSI, but on a stochastic, what it does is that if the stochastic is, say, at 85, and like let's say this is the line here for the stochastic, and the stochastic comes up here and is at 85, and then it rolls back over that and crosses that line, that's that signal right there. That's where you start getting the red dots. So it's just kind of a visual confirmation of when those happen. So you can sit there and just watch those on a chart. I just personally like getting that visual confirmation with an audio alert, so I don't have to sit there and stare at the charts. Yeah, actually on this one, I give a little more weight. What will happen is that on these faster time frames, the stochastic will generally go first. And so what you can do is set the MACD settings so you have a little higher tolerance on the MACD setting. So if you're waiting, and you can tweak these, but if you're waiting for the stochastic to cross the 80 level, and then you can have the MACD basically on the MACD, I'm not really concerned about a certain level. It's just having the fast line cross back below the slow line, and that I'll use that. Right, Jim, and that's what you'll see tomorrow. But what's nice about these things is you can use these without pivots, but if you're using them with pivots, The pivot will get you in early. So you can sit there and you take a rally to a pivot, and then generally 5 to 10 minutes later, you can see and get like a scalper sell or a scalper buy confirmation. You can wait for a scalper buy or scalper sell, but by using these in conjunction with the pivots, you'll see that generally you'll already get into the trade, and then shortly thereafter you're going to see that you're actually getting a confirmation of the trade. And what would happen before is without these is you'd get in at a pivot level, and if you were in a runaway market and on the wrong side of the trade, you wouldn't really be able to figure it out in time before you got stopped out. Whereas this will tell you that, okay, you just sold against a pivot level, but now you just went into a scalper buy, and it's telling you that the market is telling you that it's stronger than you thought, and you need to get out of your trade. So you'll see how we use it tomorrow. The whole idea of pivots is that it's price-based, and so it's getting you in a fraction before any indicator-based traders. And what will happen is that the scalper buys and sells are some of the fastest confirmations that we've seen, and will confirm your trade very, very quickly. Now, some people actually will wait until they get to the scalper sell or the scalper buy, and there are situations that we'll see that we'll see tomorrow that we'll actually wait for confirmation before we get in. But that's just how you use them in conjunction with the pivots. The best time to use them, the best time I've found to use them is when the markets are like this last week when the markets were just getting slaughtered. What we'd do with them is we'd just sit there and we'd be in a short, and instead of using like right here, we'd use a pivot as a target level. And then when the market was just kind of crashing, what we'd do is we'd just actually stay in the trade until we got a scalper buy. So that way you can just stay in a trade even if it falls through pivot levels. And that's one way we use it in terms of targets and stops and things like that. Mac, the sequence is, basically like right here. So right here you start off with a sell confirmation, and then down here you get a buy confirmation. So the next one's going to be a sell, next one's a buy, next one's a sell. Yeah, they work really good. Like anything else, they work best when used with a couple of other things, and I found that these scalper buys and sells work great when used in conjunction with the pivots. And then there's a couple of other ways to use them that we'll see on Monday, basically how we use them. So the main thing with this is I just want you guys to understand how they work, because what's going to happen is on Monday, these are going to be a very large part of our trading day, and you're going to see that the chart that we shared live with you guys is going to have these on it. So you just need to understand clearly how they work. You get the white bar, red dots is a sell, white bar, blue dots is a buy, understanding why they work and how they work. And then tomorrow we'll show you how we use them when we're actually executing trades. Yeah, if you remember, basically this whole manual builds on itself. So you can play the pivots without this whole scalper buy and scalper sell, but the scalper buy and scalper sell is kind of an enhancement to the pivots and gives you a visual representation of which way the market's going to go. And what I found too is you can use these on other time frames, but I found that they work. They react more quickly on smaller time frames. Patricia, the blue dots. When you see blue dots, that's just a buy confirmation. That means that like the stochastics and the RSIs are moving higher. When you see red dots, that's a sell confirmation. That means the stochastics, the MACD, the RSIs are rolling over and moving lower. Does that make sense?
Here it is. Malcolm, the red and the blue dots are... Hold on just a second here. Okay. It's just a combination. It's a triple indicator. It's a combination, confirmation of RSI, stochastic, and MACD. If there are buy or sell signals, I've also got them built in there so if they get some crosses, they'll signal too. So You remember yesterday when we were talking about divergences? That's pretty much what we're talking about here. They're not just divergences. I have a little bit of other technicals in the indicator, but the major theme of it is RSI, stochastic, and MACD buy and sell signals at a pivot high or a pivot low, or a swing high or a swing low. That's what we ought to call it. We ought to call it a swing high or a swing low, so it doesn't confuse people on whether it's a pivot paint bar. The white bars are blue dots equal buy confirmation. Yeah, red dots equal sell confirmation. So try not to get too confused on them. Just remember, you want a white dot followed by red confirmation sells. That's a sell signal. Now, if you get a white bar followed by blue dots, that's a buy confirmation.
Bradley, on that one, here's what we'll do in a trade like that. If you've got the pivot, and you'll see this for tomorrow. If you're in a trade, like for example, this is just a pure pivot play, right? You get in here at this pivot, you short there, and you get out here. What I like to see is the ideal trade is I'm getting in a little bit before this confirmation, because I'm getting in on pure price-based action, and the market's falling. Now here what you can do, you've got two choices. You can either just take, and one of the things I'll do is I'll generally, when we come down to this pivot level, I'll generally be taking off half of my position right there, because at least that's my initial target, so that's where I want to get out. Now what will happen is I'll be taking off half before this pivot level marks itself. On the second half, and this is the important part, on the second half, well, I'll say this in the room, is like, all right, first half I'm out at the pivot level, second half I'm staying short until we get a scalper buy. Now in this particular case, we got a scalper buy shortly thereafter, right at the midpoint. But what will happen sometimes, like if you look up here, we got the scalper sell, okay, and maybe you take half off at the midpoint, basically, per the pivot strategy, and then the second half is like, all right, I'm staying short until we get a scalper buy. So in this particular case, we end up going down to the next pivot level and through it, and then we get a scalper buy, and that's when I cover. So what I like to do with these is I'll get in with multi-lot contracts on a pivot play. The first half I'm going to take off at the next pivot level. The second half I'm just going to keep it on until we get a scalper reversal. And that's just a way to potentially stay in a trade for longer than just a pivot play. All right, does that make sense? Because you're going to see these tomorrow, because we're going to sit there and go, all right, we're taking half off this pivot. Now, just stay short until we get a scalper buy. And that's what I'm talking about. Right, Bradley. Okay, here. What we're going to do, we'll go through it again. Okay, here's let's say there's a midpoint up here, which is just off the screen, which you can't see. All right. So, if you're trading multi-lot contracts, okay, what you're going to do is you're going to get in at the pivot level up here, and then your first target, remember what we talked about yesterday, the first target is going to be at the first midpoint. Now, if you've got multiple contracts, you can peel off half at these levels. And so I'll take half off here, and then the second half, I'll bring my stop down. All right, instead of having a 20-point stop up here, I'm going to bring it down to my entry, plus 3. The pivot plus 3, and then on my second half, I'll just stay in it until we get a scalper buy. So in this case, we just keep drifting down, drifting down, drifting down, drifting down, drifting down, and then we get a scalper buy, and then this is where I cover the second half. So here, I cover half at this pivot. There, and then I'll cover the rest at that scalper buy signal there. Oh, I see, Bradley. Yeah. So what you're talking, yeah, sorry, I was looking at the wrong example. All right, so in this case, let's say that you're going to do that same trade that I talked about here. Okay, your entry's here. You come down here, and you cover half. Because what's going to happen is you're going to hit this level just slightly before the scalper buy, right? So I cover half, and now I'm going to hold on to half until I get a scalper buy. So let's say I cover half at 3 o'clock, and then at 3:01 we get the scalper buy. So now I'm going to cover the other half right there. So I end up covering the whole position right there. I just do half off, at 3 o'clock, and then half off, the rest of it off at like 3:01. And so in that particular case, the market wasn't going to move, didn't want to move lower, so I ended up getting out of the whole position right there, just in half increments. No, it's okay. I'm glad you asked, because it's kind of a confusing topic, so it's important to understand it before heading into that. Yeah, if you guys are confused on anything like that, please ask, because that's we know how to trade, but it doesn't mean that we present information in a professionally. We're not professional speakers or professional educators, but we just tell you how we trade. So if we don't have a concept like this that's not presented real clear, just keep asking us, and we'll explain it. Does Larry? eSignal doesn't have this indicator, but we're trying to get it developed for eSignal. We do have it developed for TradeStation. I don't know, Hubert, is there any feedback on when that might be done?
We just turned it over. We turned it over to the guy last week or the week before.
Okay.
So it'll be anywhere from 2 to 4 weeks.
Yeah, so it looks like maybe in 2 to 4 weeks it could be ready for eSignal. Right. Manny said professional presenters can't trade. No, that's fine, and it helps us too, because when you guys ask questions and stuff like that, we'll know where to focus on when we're explanations and stuff like that. All right, so do you guys have? So I only have like one chart on this, because what's going to happen is tomorrow, all day long, you're going to see basically the scalper buys and scalper sells, and we're going to be talking about them. So I just want to make sure that you understand how we use them, because they're not very complicated to use, but they're the concept of how we use them is very precise. So you just want to make sure you're up to speed on that.
Explain to them that there will be no yellow bars tomorrow.
Oh, yeah. For you can see right now on the bars, you'll see like red bars and yellow bars and blue bars. Basically, you'll see we've actually changed this to where if it's a downtrend, we just have red bars. If it's an uptrend, we just have blue bars. So that's the only difference you'll see for tomorrow. All right. All right, let's jump on here. JMac, that's a good question. I'm going to go back here to the chart. The question is, do you exit the position when the paint bar prints, or do you wait for confirmation? I've done both, and what I found is that typically when you get the bar like this, you're going to get the bar, and then a few moments later you're going to get a dot. What I have found is that most of the time, when I see this white bar, if I'm in a position and I see the white bar, I'll get out. Because really for a confirmation, I'm looking for the confirmation to enter a position. If I'm looking to get out of a position, I'm really just looking for the next white bar. Patricia, yeah, I use this on the... Well, I chart this on the S&Ps, but I also use it on the Dow Minis. I found that it charts a little more cleanly on the S&Ps, but if I get like a scalper sell on the S&Ps, I'll use that signal to get in or out of a Dow trade. Yeah, no problem, JMac. That's a good question. Well, the cool thing too is in TradeStation you can set up an audio alert. So basically, what happens is anytime this white bar paints itself, I'll have an audio alert too, so I can sit there without having to stare at the screen. I can be, down the hallway, I can be on the phone, and I'll hear the audio alert for, swing high or swing low or pivot high or pivot low or whatever you want to call it, then I can come back in and see what's going on in the market. All right, so we've kind of covered all this. I'm just moving on to the next page on 138. You can see the main thing I like to use this for is getting quick confirmations when I get into a pivot level. But then when I get out of half a position and I've got an open target for the rest, I'll use if I'm long, I will just take the next scalper sell as my exit level for the rest of my trade. And what happens is, every once in a while you get those runs where the market will run 50 or 60 Dow points or 5 or 6 S&P points, and this will keep you in the trade until that run is over. So that's why I really like these. They're a nice visual. They kind of keep a trader on solid ground and footing. You don't get carried away because what will happen a lot of times is that, the S&P can run up 5 points, and then a trader will watch it turn around and come back 4 points and then end up getting out of the loss. Whereas this is telling you, hey, you just got to pivot, you just got a scalper high here, this runs over, and you get out. All right, so that's pretty much all the scalper buy and sell stuff. What I want to do real quick is, we actually did that. Yeah, we can do. You want to do the ticks and then we'll do squeezes, like ticks on this one? Okay. All right, let's go over tick fades real quick, and then we're going to go over squeezes. Here's a question. Do you ever hold a position if you get a scalper bar against your position? Jim, that's a great question. It depends on the type of trade, and we'll talk about that tomorrow. If I get into, let's say I'm in a pivot trade, and I'm long, and like 5 minutes later I end up getting a scalper sell, instead of waiting for my stop to get hit, I can use that to exit my position. And so you'll see me doing that tomorrow. You have to be a little careful, though, because what will happen is, especially on sometimes, if the market's just chopping back and forth, you're going to get scalper buy, scalper sell, scalper buy, scalper sell. So you want to kind of use that in conjunction with some other stuff too. But you'll see that it's a good indicator for not this. If you're sitting around in a trade that's not working, this indicator is going to be the first thing to tell you that it's not working, and it can get you out of a trade early. What I want to do now, this next, that's all the scalper buys and scalper sells. So what I want to do now is just go into tick fades. And again, this is like 4 pages. It's a real basic concept. And if you guys remember when we were talking about the intraday indicators on Saturday, there was one of the trades that we talked about where if the ticks got up to 1,000, we were exiting our longs and looking at shorts. Or if the ticks got to minus 1,000, we were exiting our shorts and looking at longs. And this is the actual play that we use using the ticks. All right. This is a very easy play. You don't have to use any indicators or anything like that. What we're looking for on this play is we're looking for ticks to reach extreme levels, and that's all I'm interested in this play. And when the ticks get over plus 1,000, that's an extreme level. That means that you've got everybody and their mother buying stocks. You've got the program buyers in there. Basically, they're throwing all bullets at the market. So what's going to happen when all this buying pressure goes away and it just kind of subsides and pulls back? The market's going to start falling. So I like to use this maximum buying pressure to establish contrary positions to what's going on. So what happens is it's almost like the gap play. When I see 1,000 ticks, I'm in there setting up a short. When I see minus 1,000 ticks, I'm in there setting up a long. And let's go in and let's look at some examples and talk about the parameters here. All right, on this particular chart, it's kind of a small chart, but I'll just show you an example here. You can see here that here the ticks get to plus 1,000, okay, right there. So we're shorting. Right there, and you can see that the market drops about 25 Dow points. All right. Here the ticks get to 1,000 again, short here, and this ends up falling about 15 Dow points. Here the markets get plus 1,000, short here at this extreme, and the markets fall about 15 Dow points. And then down here you've got minus 1,000 ticks. That's your buy level, and you end up getting about 15 Dow points there. Alright, so that's like real quick of how we do it. Now, what you'll find is that these tick plays will oftentimes line up with other plays that we're doing. For example, Malcolm just pointed out here that the gap play, Friday, the gap play and the tick fade happened at the same time. And that is actually what you'll see as we go through this manual. You'll see that a lot of these plays combine together for plays. And you'll see that, sometimes you'll get the market will rally right into a pivot level, and it'll take it'll hit 1,000 ticks as it rallies into that pivot level. When I see that, I really like it because that's a great short. Not only are you up against a pivot level, you've got 1,000 tick reading, so it's a great opportunity to go short. Justin, on the tick plays you can actually play these by as they are. I know a guy who's been trading the S&Ps for 20 years, and he's been very, very successful at it. And this is the only play he does. He just has one screen. He doesn't listen to any news. All he looks at is time and sales. He looks at time and sales for ticks and time and sales for the S&P, and he just trades the big contract. And when ticks get up to 1,000, he shorts it. When ticks get to minus 1,000, he buys it. That's all he does, and he makes money at it. Patricia, what are you asking? Basically, on a tick chart, it's like right here. That's 1,000 ticks right there, and that's minus 1,000 ticks right there. So you can see it's got 1,000. If you look at the intraday indicator, so you'll see tomorrow too on the chart, like on the radar screen. If you look at that radar screen layout that I sent you, if you open up that, you'll see that the ticks, there's lines at the plus 1,000, minus 1,000 too. So let's go over the parameters real quick for this trade. One of the things I like about this trade is that there's no interpretation. You just take it. So basically, this is what I do. For the YM, all right, I'm looking for a 30-point profit target, a 45-point stop loss, and I'm only going to hold the trade for 30 minutes. All right? So what does that mean? That means if after 30 minutes my profit target or my stop has not been hit, I'm getting out at the market. Okay? And that's very important because after 30 minutes this play is over. And you don't want to keep hanging on to this trade. What happens is a lot of times is you'll get into these trades and, most of the trades on these I don't get stopped out and then I don't hit my target. What happens is most of the time I end up, picking off like, it can be a break-even trade or, picking off like 15 or 20 points of profit. Sometimes the target's hit really quickly, and very rarely is the stop hit, because what happens is when you get up to 1,000 ticks, the market really doesn't have much more to give, and if it's a buy program, it still needs to pause and consolidate for a little bit. So it's really important is to remember that 30-minute rule. And in fact, what you can do is I have a little clock, and I'll sit there, and when I get into one of these, I'll just set it, and after 30 minutes, it'll start beeping. Because, when you're watching the market, the time can go by really, really fast, and that beeping will alert me and say, okay, I'm in a tick trade, and that tick trade is up, and I need to get out now. For the S&P, it's the parameters are 3-point target, 4.5-point stop, and 30 minutes. For the NASDAQ, 6-point target, 9-point stop, 30 minutes. Okay? So probably the most important thing on this is that I'm giving it parameters that gives it time to move, and also too I'm giving it a time stop. And the time stop's the most important part of the tick play. Because what will happen is after 30 minutes, the tick play becomes invalid. It's time to move on to the next trade. The other thing I found is that, generally, I will only take these trades between 10 o'clock and 3:30. The reason for that is that most of the time, if there's going to be any big buy or sell programs hitting the markets, they typically happen before 10 or after 3:30. There are still some buy and sell programs that can hit, but these are the ones that can cause, because of the opening reports and stuff like that, these are the ones that can cause a little more market gyration. Oh, yeah, Sarah, great question. I was talking about how most of these setups that I use I won't take during the doldrums. This is one of two setups that I will take during the doldrums for stocks. And I found that tick fades actually work really, really well during the doldrums. Because what will happen is that the market will be really quiet, and then all of a sudden you'll get some random rally where the ticks get up to 1,000. As soon as that buying pressure evaporates, the market's going to fall. Yeah, so it's a really good one to watch during the doldrums. The other doldrum trade is the 5-minute squeeze, which we're going to go over today. We haven't gone over the squeeze plays yet. Justin's asking, if you get a contradictory scalper sell, will you use that to exit your position prior to your profit target is hit? Justin, that's a good question. Usually what I like to do with the tick fade is give it that 30-minute time limit, and I usually find that we won't get a scalper sell for like 20 to 30 minutes. So what I'll find is that if we get into a tick fade situation, and after like 20 minutes or so, you get like a scalper, you get a reversal. Let's say you're short, and then you get a scalper buy 20 minutes later. That's a good place where you can use this in conjunction with the tick fade. It's one of those things where it gets a little tricky because you want each play to stand on its own merits, but that's a way that you can combine the two to kind of milk it out a little bit more. So if you don't, what I'll use with this is kind of by default is I don't want to stay in the play more than 30 minutes, but one of the things that you'll find on Monday is that when we're doing these plays, you can combine them with the other indicators that we use. Jim, no, because what will happen is, what I've seen is like, it's one of those things that if you wait, there are times when you can get better entries, but what I will do is I'll scale in. Like when I get the first 1,000 tick reading, I'll just scale in with half a position, half a position at the market. And from there, if for some reason we just keep going and we get a plus 1,100 ticks, then I'll go ahead and get my second half. But it's one of those things where you can sit there and wait and try to time an entry. But what I've found is that you basically use the 1,000 ticks as your entry. The one exception to this is if you look at the next slide on page 142, is just kind of beware of extremes. If you've got a day where you have extreme negative ticks all day long, then that basically shows that there's this is on this kind of a particular day. I'm not going to focus on long trades. So on a day like this where you have multiple extreme readings on the downside like this, and these days are actually pretty rare, or days like this where you have multiple extreme readings to the upside, then I won't take these trades. And these days happen like once or twice a month. What you want to see is a day where you've got basically equal weighting on the upside, equal weighting on the downside. And so this is not like on days like this when you get 1,000 ticks, 1,000 ticks, 1,000 ticks. It's because you've also got the trends heading lower. You've got everything on the radar screen pointing to bullishness. When I'm using the tick fades, basically the best days are, if you've got a positive 1,000 tick reading and the markets are mixed, that's a great day to take the trade. Or if you get a positive 1,000 tick reading and the markets are negative, that's a great day to take a tick fade. And that's one of the things that you'll see on Mondays when we're doing the radar screen, is the first thing that we're going to do is by 9:45 to 10 o'clock, we're going to get a bias. Okay, the market's going higher or the market's going lower. So in that case, then we're going to focus on long setups, or we're going to focus on short setups. And so if we're just going to focus on long setups, then that means we're going to ignore sell setups, whether it's a tick extreme, whether it's a scalper sell, or whatever it is. So that's the main thing to remember too, is that we're going to get our bias first by looking at the radar screen. We're going to determine whether we're going to focus on the long side or the short side, and then we're going to just focus on those plays during that time. Okay.
Back up the ticks for a minute.
You want to jump in there?
Yeah.
What the hell is that?
Oh, I fed that fish. Do you hear?
Yeah. It's like,
He back came out of that tank. Hey guys, just a little bit different slant on ticks. You can see John uses a 5-minute chart. I'm more of a scalper, so what I will use is I'll use like a 1 or a 2-minute chart, and I just use the good old-fashioned line chart where it's just plotting a line unclosed. So my ticks look like this, okay, at the same levels, all right. And the reason I do that is because I have to be a little bit quicker, and I'll actually use it like if you get a tick of 1,000 or like 1,200. As soon as I see it just rolling over here on a 1 or 2-minute chart, that's when I go. Okay. So it's just a little bit different slant on the ticks, but it's the same type of play. It's just tweaked it a little bit. You guys understand? And I love candlesticks. I mean, in my trading, I'll use candlesticks with a lot of stuff, but on ticks, I just use straight up line charts. It kind of, I react to them a little bit faster. Alright, so that's it. Alright, we're going to save this, or we're going to go straight into squeezes?
Let's go ahead. We're just going to pause this for a second and then queue up the next segment for squeezes. So we're going to take 5 minutes here. All right. So the next section will be on squeeze plays, which will start here in just about 5 minutes.
Page 291.